Hello everyone. This is the 18th session of Cost Accounting, BCom 5th semester, Vijayanagara Sri Krishna Devaraya University. In the last session, we have learned how to record the transactions under FIFO method of pricing the material issues. In this session, we will learn about last in first out method, that is LIFO method of pricing the material issues, merits and demerits of LIFO method, and how to solve the problem under LIFO method of pricing the material issues. What is LIFO method? That is last in first out method. Under this method, issues are priced on the assumption that material purchased last are issued first, though the actual physical movement of material may not follow this pattern. Issues are priced at the price of latest purchases of materials remaining unissued as per records. As a result, the closing stock gets priced at the price of the earliest purchases of the materials lying unutilized as per records. The method is particularly useful in the case of rising prices. The production is charged at the price of latest purchases while the closing stock at the earliest prices which are lower. This leads to lower book profit and hence less tax liability. In case of falling prices, the effect is reverse. So what are the merits or advantages of LIFO method? LIFO method is simple to operate and easy to understand. LIFO matches most recent costs against current revenues. During the period of rising prices, book profit will be reduced, hence attracts lesser income tax. So LIFO method facilitates the complete recovery of material cost. So what are the demerits or disadvantages of LIFO method? Inventory valuation does not reflect the current prices and therefore not useful in the context of current conditions. Second one is, when the number of purchases are very large, this method becomes tedious. So during the period of declining prices, the book profits are inflated and more income tax payable on the profit. A LIFO involves considerable clerical work. We will solve one problem. So here is the illustration. Draw a stores ledger account using LIFO method. 1/10/2016 opening stock 200 units at rupees 2 each. 3/10/2016 issued 150 units. 5/10/2016 purchased 100 units at rupees 2.20 each. 7/10/2016 issued 100 units. 10/10/2016 purchased 150 units at the rate of 2.40 each. 12/10/2016 issued 90 units. 20/10/2016 purchased 180 units at rupees 2.50. 28/10/2016 issued 200 units. 13/10/2016 there was a shortage of 10 units. First we will write down the format. On the top we will write down the company's name. Next we will write down the stores ledger account. Under that we will write down the method. Here it is the LIFO method. On the left hand side we will write down the name of the article, next code number, and then bin card number. On the right hand side we will write down the stock levels, that is reorder level, minimum stock level, maximum stock level, and also reorder quantity, that is EOQ. Stores ledger format is same for all the methods. So it contains main 5 columns: date column, receipt column, issue column, balance column, and remarks column. So in the receipts column we have 4 sub columns. One is GR number, that is goods received note number. Next is quantity, next is rate, and the last is amount. In the issue column also we have 4 columns: MR number, that is material requisition number, quantity column, rate column, and amount column. So next is the balance column. So in the balance column we have 3 columns: quantity, rate, and amount. So what is the first transaction here? So the first transaction is on So the first transaction is 1/10/2016, opening stock 200 units at rupees 2 each. Opening balance is 200 units at the rate of 2 rupees. So first we will write it down on the balance column. Quantity is 200 units, rate is 2 rupees, 400 rupees, 200 into 2, 400 rupees. The next transaction is 3/10/2016, issued 150 units. We must see that whether all the transactions are given in the chronological order. So if the transactions are not given in the chronological order, we should arrange them chronologically. So the second transaction is on 3rd October 2016, issued 150 units. So we will write it down in the issue column. So quantity is 150 units. So before issuing, we should see the balance column. So quantity available and the batches available are, only one batch is available, that is 200 units at the rate of 2 rupees. So from that 200 units batch we have to issue 150 units. There is only one batch, so we are issuing from that batch only. So 150 units in the quantity column at the rate of 2. 150 into 2, that is equal to 300 rupees. So balance we will write down. From the 200 units we have issued 150 units. So 200 minus 150 units, 50 units remaining at the rate of 2 rupees. 50 into 2, that is equal to 100. Next transaction is 5/10/2016. Purchase 100 units at the rate of rupees 2.20. So purchase should be written on the receipt column. Quantity is 100, GR number is not given. Quantity is 100, rate is 2.20. So 100 into 2.20, 220 rupees. So next we will write down the balance. So while writing down the balance, we should write down the oldest balance first. The old balance is 50 units at the rate of 200, and next we will write down the purchases. So 100 units at the rate of 2.20, 220 rupees. So the next transaction is on 7/10/2016, issued 100 units. So issues should be written on the issue column. There is no information about the MR number. So before issuing, we should see the balance. So balances are 50 units at the rate of 2. So we should see the last date balance. 50 units at the rate of 2 rupees 100, and 100 units at the rate of 2.20, 220 rupees. So this is the LIFO method we are following. So we should take from the latest, that is the last batch. So the last batch is 100 units at the rate of 2.20. So 100 units are to be issued. So those 100 units should be issued from the last batch, that is 100 units at the rate of 2.20. So 220, 100 into 2.20, 220. So next we will write down the balance. Balance is 50 units available at the rate of 2, that is equal to 100. So from the last batch, that is 100 units at the rate of 2.20, no units are available. So whole 100 units are issued on the date. So only one batch is available, that is 50 units at the rate of 2, that is equal to 100 rupees. So next transaction date is on 10/10/2016. Purchased 150 units at the rate of 2.40. So purchases are written on the receipt column. Quantity is 150 units, rate is 2.40. So 150 into 2.40, 360 rupees. Next we will write down the balance. So 50 units at the rate of 200, 150 units at the rate of 2.40, that is 360, that is the purchases. Next date of transaction is on 12/10/2016, issued 90 units. So units to be issued are 90. So we must see the last balance. So last balance are last balance are 50 units at the rate of 200, 150 units at the rate of 2.40. So the latest or last price is 150 units at the rate of 2.40. From this batch we have to issue the goods. So from 150 units we are issuing, so 90 units at the rate of 2.40. 90 into 2.40, 216. So next we will write down the balance. So balance is 50 units at the rate of 200. So from 150 we have issued 90 units. So 150 minus 90, that is equal to 60 units into at the rate of 2.40. So 60 into 2.40, 144 rupees. Next date is 20/10/2016, purchased 180 units at the rate of 2.50. So they are written on the receipt column. Quantity is 180, rate is 2.50. So 180 into 2.50, 450 rupees. So the balance will be, the oldest balance is 50 units at the rate of 2.20, 2.00. So 50 into 200. So next is 60 at the rate of 2.40, 144. Next is the purchase 180 units at the rate of 2.50, 450 rupees. So next transaction is on 28/10/2016, issued 200 units. So we have to issue 200 units, and first we have to see the available balances. Available balances are 50 units at the rate of 2, 60 units at the rate of 2.40, 180 units at the rate of 2.50. So first we must issue the last batch, that is 180 units at the rate of 2.50. So we have written 180 at the rate of 2.50, 450 rupees. So we need 20 more units. So from 60 unit batch, that is at the rate of 2.40, we will issue those 20 units. So 20 units at the rate of 2.40, 48 rupees. So next we will write on the balance. So available balance will be 50 units at the rate of 200. 60, from the 60 units we have issued 20 units. So that is 60 minus 20, 40 units at the rate of 2.40, 96 rupees. So next, the last date is 31/10/2016. There was a shortage of 10 units. So shortage should be always written on the issue column, and they should be priced under the current issue method. Here the current issue method is LIFO method. So 10 units in the quantity column, that is in the main issue column, quantity column 10 units. The rate should be the latest price, that is 2.40. So 10 into 2.40, 240 rupees. So the balance available will be 50 units at the rate of 200 rupees. So 40 minus 10, that is equal to 30 units at the rate of 2.40, that is equal to 72 rupees. We should write down the adjustments, if any, on the remarks column. Thank you.